Nearly 2 billion adults globally do not have access to bank accounts. This makes it difficult for them to access financial services, pay their bills, or transfer money to relatives. In addition, it's very hard for these individuals to be an entrepreneur because they are outside the formal financial system. It is also difficult for them to gain access to capital or to form a business when they do not have access to basic financial services. But the good news is that many nations have made commitments to expanding financial services for poor people. They understand that financial inclusion is vital to economic development and social inclusion. So they have developed financial inclusion policies and are implementing policy frameworks that encourage inclusion. Today, John Villasenor, Robin Lewis, and I are launching the second annual Brookings Scorecard, measuring progress on financial access and usage. With the financial support of the Bill and Melinda Gates Foundation, we have embarked on a 3-year study of inclusion in 26 developing nations. The short summary is that financial inclusion is taking off. We've seen progress in access to financial services in many countries. They're making efforts to help marginalized populations such as women, minorities, refugees, and young people. And this is happening through mobile money as well as digital financial services. So this week, we have published our report and scorecard. Copies are available on the Brookings website. That's at brookings.edu /FDIP, FDIP. So that will give you access to the full results. And then also, for those of you who are in our audience here today, we have a short version, a 4-page summary of the key findings, the scores of the various countries, and some of the key recommendations that we are making in order to help promote financial inclusion. So we encourage you to read our report. If you have any comments or suggestions on it, you can email that to us at fdipcomments@brookings.edu. That's fdipcomments@brookings.edu. So this is the second of what will be 3 annual reports. So we will incorporate feedback that we get and suggestions that you make into our next report. And we do appreciate all of the feedback that we got based on last year's report that we put out in August of 2015. We got a number of suggestions from people around the world in a number of different countries. We talked with leaders in the NGO community who are active in financial inclusion, and we're very grateful for all of the suggestions that they made. So to give you a more detailed sense of the highlights of our study, my colleague John Villasenor will summarize the key findings. John is a non-resident senior fellow at Brookings, and he's a professor of electrical engineering, public policy, and management at UCLA. And he's written extensively on technology policy, financial inclusion, and the developing world. And then after John's presentation, we will hear from the ambassadors to the United States from Uganda and Rwanda, who will tell us what they are doing kind of on the front lines of trying to use technology to bring financial services to the people in their country. So I will turn the presentation over to John.
So I'd like to thank you to Darrell West, and thanks to all of you for taking time out of what I'm sure is a very busy set of schedules to spend a little bit of time with us here at the Brookings Institution as we talk about this latest study that we just released. I'm going to give about a 10-minute or so overview of the report and its key findings and put it in context, and then as Darrell West mentioned, we'll then move to the panel discussion with the ambassadors. The objective of this, and just as an acronym reminder, FDIP stands for the Brookings Financial and Digital Inclusion Project, and the objective is to provide policymakers, representatives of the private sectors, non-governmental organizations, and the general public, that can help information that can help improve access to financial services, financial inclusion, not only in the particular focus countries that we've looked at in detail in this study, but around the world in general. This is the second annual report, as Darrell mentioned. We launched this project about 2 years ago. So after working on it for 1 year, we published the first annual report in August of 2015. After the second year of work, we published this report that is being released today, and then we are now embarking, in fact, I've already started gathering data for what will be the third installment of the report to be published next summer. And what we do is we examine access to and usage of, so both the provision and the consumption of financial services in a formal context across a set of 26 economically, politically, and geographically diverse countries. And one thing you might ask is, well, sort of why do it year after year? Why not just do it once? And there's a couple of reasons for doing that. One is what we're hoping, what we all want to see is change, is forward progress towards financial inclusion. And by taking annual snapshots, then we hope to be able to make not only evaluations of the situation as it is in that previous year, but also comparative statements about relative progress as time progresses. In addition, we, like anyone else looking at this field, we certainly have plenty that we can learn. And so based on feedback from people at many of your organizations and elsewhere, we've enhanced our scorecard metrics to what we hope will help us better capture the state of financial inclusion. So for example, in this most recent year, culminating in this report today, we gave greater attention than we had in the past to the existence of consumer protection frameworks, as well as to the rate of adoption of smartphones, which we strongly believe are going to be very important in financial inclusion. In addition, we increased the number of countries in the study from 21 to 26. And in this year's report, we also highlighted some issues which are cross-cutting across many geographies, both within the jurisdictions that we've looked at as well as beyond. And those include access by women to financial services. The issue of gender equity and gender parity obviously is a global issue, not limited in any way to the particular countries in our study. And also we've looked at some of the challenges facing refugees and under-resourced migrants, among other challenges they face. Obviously they face a challenge in terms of accessing financial services. This is the list of 26 countries. And what you can, depending on how you look at it, this is either a big list or a small list. I mean, it's a big list if you're doing what we're doing, which is doing a very deep dive into each one of these countries and really trying to understand the financial landscape. On the other hand, you could argue it's a small list because there's nearly 200 countries in the world, and 26 is obviously a small subset. So you might ask, well, why not go for close to 200 countries? And the reason is that just as a matter of scale, it would be impractical for us to do the depth of analysis that we're doing in every single country in the world. And so rather than look at all the countries at an extremely superficial level, what we've chosen to do is look at what we hope is a representative subset of countries and look at each of those countries in a very detailed manner. And as you can tell by sort of doing a kind of an eye scan of the list here, this list includes countries that are very diverse geographically, politically, economically. So they are representative in many ways, not only obviously of their own financial situation, but of the financial inclusion situation you'd find in many other countries. And I'll also say that more generally, even though we have focused on the countries that you see here, financial inclusion is truly a global problem, and it is one that we have also here in the United States. There is a significant excluded population here in the United States. So by choosing this set of countries, we are in no way suggesting that the challenge is more acute here than in many other places. It is a global problem that affects every single country in the world. In terms of methodology, and the ones in bold here are countries that we added in this year's study that were not present in last year's study. As I mentioned, we increased the number of countries from 21 to 26. In terms of methodologies, what we did is we looked at four, what we can call them dimensions of financial inclusion, four kind of axes or different metrics. And then within each dimension, we examined a set of indicators that help illustrate the state of financial inclusion with respect to that dimension. And I'm breaking the rule here, don't show slides where people can't read what's on the slide, but just look at the left part of the slide. But the right part is there to illustrate sort of how we presented the information, and in the handouts you have, then you see it more clearly. But these are the 4 dimensions. Country commitment, how committed is the country's government to steps that can promote inclusive finance. Mobile capacity, that is the capacity in terms of the infrastructure with respect to mobile communications, which is obviously, it's a key factor in access via mobile devices, which is how more and more of the world is going to be accessing such services. The regulatory environment, and then finally adoption, and how much is actually, and that's sort of an output, how much is it actually being used. And of course, these aren't completely orthogonal dimensions. Clearly, all else being equal, a country with a strong commitment to financial inclusion will generally have a more favorable regulatory environment. So we're not claiming these are, in a kind of mathematical sense, purely decorrelated. But collectively, they help provide a useful snapshot of the financial inclusion landscape in a particular country. And on the right, what you see is 4 colored columns, and maybe that may be all you see. But what I see is a list of countries, and what we've done is for each, the 4 dimensions are listed at the top there in small print, and then you see the list of countries there. And for each country, we have then identified a score associated with the country. And I should also say as the caveat that we recognize that no scoring system is perfect. Anytime you try to quantitatively assess something like this, no matter what you do, you are exposed to reasonable criticisms that you should have done it this way instead of that way. So we are in no way claiming that this is the perfect way to quantify these things. We'd like to think it's a good way to do it and a useful way to do it, and one that contributes to the dialogue, but we're always interested in and welcome suggestions to do it even better. What I'm going to do is briefly go over some of the how we actually calculate this. So when we're measuring country commitment, how do we do that? And so, for example, I'm not going to read word for word everything that's up here, but for example, with respect to country commitment, we have 6 indicators, and each one of these indicators is then evaluated with respect to the landscape in that particular country. And so, for example, whether there is a national financial inclusion strategy that has been published, whether that includes or whether the country has quantifiable financial inclusion targets, next to last, existence of a dedicated financial inclusion body within the public sector, and so on. So there are metrics that we use to evaluate country commitment. Mobile capacity, we've looked at the 6 things listed here. Market penetration, 3G mobile coverage by population, smartphone adoption, availability of bill payments via mobile money services, and so on. So those are the things that we've looked at for mobile capacity. For regulatory environment, we've looked at the availability of agent banking. We've looked at the availability of mobile network operator-led mobile financial service deployments, e-money regulations, account access and usage, and so on. And then last but not least, on the adoption side, we've got a set of indicators which is more than what you see on the screen here, but I just put several representative ones on the screen. So, for example, looking at formal account institution account penetration among lower-income adults, percentage of adults utilizing online bill payments, frequency of account usage. That's another important indicator because, as everyone in this room knows, if you simply create an account and it sits there dormant, then arguably that hasn't done nearly as much to advance inclusion as if you create an account and it actually gets used. And collectively, there are, across these 4 dimensions, 30 of these indicators that you see listed here. So if you do the math, 26 countries, 30 indicators, you have well over 600, you've got a matrix with well over 600 entries, and you're assigning a number in each one of those 600 and something boxes. So it's quite a lot of effort, and then at the end of that process, you can then tally everything up and end up with a total. I'll briefly go over some of the key findings. In terms of country commitment, the countries that received a top score include Colombia, India, Pakistan, Peru, the Philippines, and Uganda, which is of course represented here. And so those are all countries where there was just a really very strong demonstrated move towards country commitment. In terms of mobile capacities, What's interesting is some of the top scoring countries in terms of mobile money adoption, which include Kenya, Uganda, Tanzania, and Rwanda, were not among the top scoring countries with respect to mobile capacity. So that's that means that even that these countries are already doing terrific in terms of mobile money adoption. It means there's a kind of low-hanging fruit, an easy opportunity to do even better by just broadening the mobile infrastructure. So there's sort of good progress on top of already good progress opportunities that are present in those countries. The regulatory environment, the countries receiving the strongest possible score were Peru, the Philippines, and Rwanda. There's been some really good progress, which I believe the ambassador from Rwanda will be speaking about in a few minutes, so I won't do a spoiler on that one. And then in terms of adoption for financial services, among our new countries, the Dominican Republic received the highest adoption score. And then in terms of, we added in an indicator measuring actual usage of formal accounts, and the top scoring countries were all in Latin America and in sub-Saharan Africa. In terms of calls to action, the report identifies quite a bit of detail about this. I'll just briefly go over some of them now. One is to establish specific measurable financial inclusion targets. One of the challenges that we have is among our 26 focus countries, and probably more broadly as well, there's a significant percentage, it's less than half, but still a significant percentage that haven't developed publicly available financial inclusion targets. And another important kind of aspect of that is that very few countries globally have established financial inclusion goals specifically focused on marginalized groups such as women. And this matters obviously because to the extent that quantifiable goals can be established, and that provides a yardstick or a goal towards which the country can then move. Point number two is to collect and analyze data relevant to financial access and usage. And this is not news. I mean, this for years people have been saying this is important, and great progress has been made. But there's still an opportunity to get more data. We see a lack of data related to things like frequency of account usage, not the existence of the account, but the actual frequency of the account usage. Data regarding, for example, trust in formal financial institutions, which is highly variable as you go from different countries, and then also demographic data gaps. We see, for example, I've mentioned gender parity issues, and we see a strong need for data to even measure what the lack of parity might be. And without that data, it's of course then hard to know where the progress is or isn't, and how to measure progress. And then we also think it's very important, number 3, to advance enabling regulatory changes. There's there's a list of regulatory steps which are known to be good for financial inclusion. So for example, leveling the playing field for providers, ensuring an adequate consumer protection environment for consumers, adopting tiered know your customer requirements to make it possible for people across the economic spectrum to have access to formal services and so on. And then last but not least, the 4th call to action we've identified here is enhancing financial capability and just basically growing the challenge is that growing access to financial services so that people actually have the ability and the knowledge and the access to these formal financial services. And also promoting the use of these financial services in ways that advance financial health. Clearly, if you provide credit services, but then they are not used in a way that advances financial health, and then you arguably haven't really moved forward. So it's important that the capability to use these services in an appropriate manner is enhanced as well. So that's a summary of where we are. At this point, I'd like to invite the ambassadors to come to the stage, and I will provide an introduction, and then we'll go into some discussions and questions.